Okay, so let's have a look and see what's happening sort of in the news wires at the moment. Really Monday, very, very quiet day data-wise, and Tuesday was really the first, important slew of data this week, which painted a mixed picture in some markets. And preliminary German GDP for Q2 was expected to show Europe's largest economy showing further, showing further rises, further gains. Slowing further. What am I talking about? Slowing. Although data published yesterday was slightly better than expected. It's interesting, that it was better than expected. A lot of media wires saying, the radio saying, they're really struggling. And of course, they're not doing as well as perhaps they'd like. But still better growth than expected at 0.3 as exports and household spending held up better than expected. And across the Eurozone as a whole, the picture was one of general contraction in growth, with preliminary GDP data recorded at minus 0.2%. Any positive news taken from this number, however, was quickly offset following the publication of the German ZEW data, which showed that analysts and investor sentiment had fallen further to minus 25.5 against the expectations of minus 19. The ZEW indicator, it's a bit more of a leading indicator because it's more about sort of sentiment and so on. So it really helps us understand what is likely to happen in the future compared with preliminary GDP, which is historical and telling us what happened in Q2. Other European data that surprised yesterday was the UK inflation data, which showed an expected rise from 2.3% to 2.6% as airfares rose and clothing discounts slowed. And whilst the market was surprised, this number is more likely an aberration in an otherwise downwards trending outlook for inflation. The picture in the US was in contrast to Europe, with more positive as retail sales for July came in unexpectedly higher at plus 0.8% compared with expectations of plus 0.4%. And whilst this is a surprise and on its own may not be significant, as most data has been indicating continued slowdown in the US economy, it does, however, suggest that consumer confidence is better than most analysts expected. And of course, we've got consumer sentiment data out on Friday, guys. So in the US, 255, bit of a weird one for data there. 255 US consumer sentiment coming out there. Let's have a little look down at that data point there, preliminary consumer sentiment there. Markets in general are stuck in August holiday mode, though, guys. So with volumes particularly light, especially in equities, and we saw the lowest volume recorded on the London Stock Exchange for several years right now, and that includes Christmas periods as well. This time last year, we were in a state of panic as the whole Eurozone mess blew up when many key political and financial decision makers were away on holiday. The markets, however, now seem more benign and are set in wait mode, waiting for further central bank moves from the ECB, the Federal Reserve and the Bank of England. But as we found over the last round of central bank meetings, nothing was announced. However, the implicit threat of intervention by the ECB to drive down Spanish and Italian yields appears to have partly done the job. We expect the markets may not hot up until the holiday season is finished, which may not happen until after the Labor Day holiday, which is the first Monday of September. So it could be a little wait to go, guys. But I think we've got a bit of an explosion coming for sure. So why do the equities keep on rising? Well, the key issue here is that many funds and traders are underweight equities. And so with no news tends to be good news. So for now, we're seeing many fund managers forced into buying equities to ensure they're not underweight in equities there. And some short covering as well, obviously, because what we're finding is as the market continues to grind higher, what you're finding is those that were expecting the top in the market, they're getting caught out of trades and they're getting squeezed out of their shorts. So you're getting a short covering grinding the markets higher there. Data today in the US, if we just move up to the Wednesday data there, US PPI, and our first look at the US manufacturing surveys with the Empire State Survey expected to show a fall from 7.4 to 6.6. This will provide an insight for traders into what may be expected from the larger and more important Philly Fed manufacturing survey that's out tomorrow. And numbers to watch in the UK, and which have a bearing on equities and GBP crosses, are as follows, with the MPC minutes today, which will provide further insight into the intentions of the UK Central Bank regarding QE measures, and so that's going to be a really important one, particularly what I said before. And retail sales is another important figure to be aware of tomorrow, where sales are expected to remain flat at 0.1%. That's tomorrow at 9:30 a.m. Still quite a bit of data out, guys, in summary, really, but as I say, good chunk of it was out yesterday, but 9:30 tomorrow, today, really big one. Don't be in sterling trades over 9:30 data there, guys. Okay. The code for the VIX is, hang on one second.